Good day, ladies and gentlemen. Narco speaking. Welcome to another video. First and foremost, I would like to wish y'all a happy new year. Wishing you guys a profitable 2023. Invest your time into within the markets. More time invested into the markets is going to make you profitable, and invest your time also into knowledge. Knowledge is power, ladies and gentlemen. And okay, so in this video I am going to explain the dollar index correlation with USD pairs. Okay, so here we have the dollar index on the 6 months chart. Okay, so for sure you're asking yourself, what is the dollar index? So the dollar index is basically the USD currency equals the USD currency as a whole. So this meaning that whenever we have the USD currency, whenever we have the USD currency selling, all the pairs that start with the USD on the left side are also selling, and all the pairs that have USD on the right side are buying. And why is that? Why are they buying? It's because they are inversely proportional. Okay, they are inversely proportional. Okay, so as you can see here, the USD currency correlates with the pairs that start with the USD on the left side, and then it decorrelates with the USD pair, with the USD pairs that start with another currency and USD on the right side. Okay, so whenever the dollar index is selling, we have the USD, the pairs that start with USD on the right side selling too, and the pairs that end with USD on the right side will be buying. Okay, so whenever another example is that whenever the USD, the dollar index, is buying, we have the USD pairs that start with USD on the left side will be buying too, and the pairs that end with USD on the right side will be selling. Okay, so that's the USD, the dollar index in a nutshell. Okay, so now let's prove that. Okay, so here on the 6 months chart we have the USD currency, which is the dollar index, the DXY. Okay, so we can see that this DXY, we can see that price is beautifully in a bearish trend, as price has violated this low here, Okay, let's start by marking it out like this. As you can see here, we have this low here, we have this high, this low, this high, and this low here. Okay, so now as you can see, we're in a bearish form, we're in a bearish trend. Okay, so let me just remove this now, and as you can see here, we have this beautiful break of structure here and this grab of liquidity here. Okay, this bottom break of structure, and as you can see, we have this supply area here, that price has tapped into. But then, okay, now let's scale into the 3 months time frame. Okay, so now as you can see, within that supply, we can see that there is a refined supply area. When you're refining a supply area, as you can see on the 6 month time frame, we have this supply area here, and but then on the 3 months time frame we have this refined supply area here. So refining your supply or demand areas can act in a good form and can act in a bad way, because sometimes when you refine your supply area too much you can miss trades, and sometimes when you don't refine your supply areas you can enter a trade too early and you can risk a lot, because as you can see here with this 6 month supply area we are risking over 9,000 pips, but then with this 3 months supply area here we will be risking half of that, 5,000 pips. Okay, that's how the difference between not refining and refining your supply areas. Okay, so now on the 6 months time frame price stepped us into this supply area, but then on the 3 months time frame you can see here we have this supply area that is refined. So this can act as an liquidity inducement trap. Liquidity inducement trap is when price rejects in front of your supply area or your demand area, and it acts as a trap whereby what you call this, sellers will be looking for their selling opportunities there, but then just to get liquidated to tap into our supply area. Okay, so this is how liquidity inducement traps work. So now we're going to have this. So now a lot of, for instance, this low take gets taken out, so now we know that we have this break of structure and this change of character here. So obviously now sellers will be looking to take their sells here, not knowing that we have this liquidity inducement trap here, meaning that there is liquidity lying above this high here, meaning that we could still take our entries of this supply area and push to the downside. Okay, that's how the liquidity inducement trap works. Okay, so now on the dollar index on the 3 months time frame we can see that we beautifully pushing bullishly. So now, but then price rejected on this just below our supply area. Okay, so now we're looking for price to respect this low here and then go violate our previous high. It violating our previous high, it would be tapping us into our supply area and pushing to the downside. Okay, so now let's look at USDJPY and see if we have more or less the same thing. Okay, so on USDJPY here we have this. Let me just clear the chart. Okay, so on USDJPY here we also moving bearishly. We also breaking violating lower lows and respecting lower highs. Okay, so now as you can see here we have this break of structure here and we also have this break of structure here. Okay, so we have this and this and this. Okay, now as you can see here, I can see here this all acts as liquidity, internal range liquidity, and also this acts as a liquidity inducement trap too. So I can see that price went above and respected our supply area on the 3 months time frame. Okay, so this here acts as liquidity inducement trap. So price just rejected above our below our supply area and pushed to the downside, broke our low. So now it's a trap for sellers to get into this trade early, so it's a trap. So now we can see that they got liquidated, and us will be selling, we will be taking our selling opportunities at this supply area here. As you can see here, the same thing is going on the dollar index. More or less the same thing is going on the dollar index. Okay, so now we can see on the dollar index we have this push to the downside. We have this push to the downside. So if maybe we can copy this and paste it here on the USDJPY chart, we are going to see that it's more or less the same. As you can see there, it's more or less the same length, and that's to show that whenever the dollar index is selling, also the USDJPY, the pairs that start with the USD on the left side will be selling too. Okay, so as you can see, this here is the same length as this here. Okay, so now let's delete that. Okay, so now let's move on to AUDJPY and see what we have there. I mean AUDUSD and see what we have there. Okay, so now on AUDUSD we can see that we were moving beautifully bearishly so, but then now we violated the rules and properties of a bearish trend. Okay, as you can see here, we have this break of structure here, and price broke structure, broke and violated this lower high here, meaning that we could be moving from a bearish trend to a bullish trend. Okay, so this is a chart, this is a top change of character. As you can see here, price violated it, and then as you can see here, we have this beautiful demand area here that price tapped us in. So this is going to be our demand area. So if we can go again and see, so the dollar index sold. So what I said is that whenever the dollar index is selling here, the pairs that end with USD on the right side will be buying. And look at this, look at this, AUDUSD is currently in a buying trend. Okay, so let's move again to the dollar index, and let's move to the daily chart. So on the daily chart, this is what we have here. This is what we have here. So on the daily chart, we can see that price has been moving bullishly beautifully so, creating higher highs and creating higher lows. Okay, so as you can see here, this is our previous higher high. It was violated, and this is our new higher high, and it violating the previous higher high. We can see that here we have a top break of structure, and price pushed to the downside and violated the rules and properties of a bullish trend, meaning that we could be moving from a bullish trend to a bearish trend. Okay, so this is a bottom change of character. Okay, so now we have this schematic here, BIS change of character, and yeah, so we currently have this schematic on the dollar index. Okay, so now let's move on to USDJPY and see what we have. So on USDJPY we have more or less the same thing. So we have this break of structure here and this change of character here, to show that the dollar index and the pairs that start with USD on the left side are more or less the same thing. Okay, so this is the top break of structure and this is the bottom change of character. As you can see here, price formed the same schematic the dollar index formed. Okay, So now let's move on to AUDJPY and see what we have there. So as you can see here on USDJPY here, okay, so on USDJPY here we have this bearish trend here, and we can see that price has formed a SMS, which is a shift in market structure. So price could be moving bullishly, so, and price has been moving bullishly, so as you can see here we have this BOS here, and we have this high here that was violated, which is the change of character here, top change of character and bottom BIS. Okay, so how is this our lower high and this our lower low? Okay, so if you move to the maybe the 12 hour chart, you can see here price has been moving bearishly, so meaning that here we have this lower high, lower low, lower high, lower low, lower high, and you can see this I can't consider this as a lower low because it didn't violate our previous lower low. So this here is going to be our lower low, and this here our lower high, lower low, because this low violated this low. Okay, so now as you can see that price pushed to the upside and violated our lower high here. So now we can see that we could be moving from a bearish trend to a bullish trend. Okay, so now let me just clear that out, and as you can see, we can see that the dollar index and this AUD, the Aussie dollar, has formed the same schematic, but then inversely. As you can see here, there is a break of structure and a change of character, but then it's inversely like the dollar index one. Okay, so this is how you use the dollar index to your advantage, because you know that whenever the dollar index has this schematic, you should have this schematic on the pairs that start with USD on the left side. Okay, so now we have this. Yeah, so now if we move on to the, maybe let's move on to the 1 hour chart, see what we have there, and see what we have there. So another confluence of this is that, okay, let me just cut our charts here. As you can see here, this is the CPI data. This was the CPI data on Thursday. Yeah, so what happened here is that, let's just move on to the 5-minute chart. Okay, so as you can see here, CPI, okay, so CPI firstly sold, bought a little, then sold again, then bought. Okay, so let me just copy this structure and show you guys on the AUDJPY. Okay, so as you can see here, this sold, bought a little, sold, and then continued up. Okay, so I am just going to copy this and see what we have on, paste it here, and see what we have here, what we had here on CPI. Okay, so now let me just find when was those news. CPI happened on, yeah, I think this is CPI here. Okay, let me just cut here, and this is what we're looking for here. This is what we're looking for on the 5-minute chart. Okay, So this is the copied structure I have on the dollar index, whereby it doesn't look good. My apologies for that. I just copied it from the dollar index to this chart, so I doubt. Okay, so now as you can see here, CPI also sold on the USDJPY chart here, bought a little and then sold, then bought, to show that it correlates with the dollar index. And then if you move on to the Aussie dollar, if you move on to the Aussie dollar here, and we can, let me just look for when CPI happened. CPI happened on the 12th, it was, let me just find it. Yeah, it's somewhere here. Okay, let me just cut charts here and move on to the 5-minute chart. Okay, since CPI, it sold, bought a little, then sold again, then bought on the dollar index and USDJPY chart. Here we expecting to see the something inversely. Okay, so now is as you can see here, CPI here, it bought first, sold a little here, then bought and then sold after. As you can, and you can see that the Aussie, the pairs that start with that end with USD at the end, they bought, and then the dollar index sold. The dollar index sold first with the pairs, also with the pairs that start with USD on the left side. Okay, and that's it for the video today, and that's how the dollar index correlates with the USD pairs. Please make sure you follow me on Instagram, ladies and gentlemen, for free smart money educational content here, and do check out our free Telegram group channel. We share daily analysis and signals. And if you have reached this far, please let me know what kind of videos you would love to watch, and please let me know in the comment sections. Yeah, and please like, share, subscribe, and click on the bell notification button so that you get notified every time I drop a video. Peace.